rewritten 2015. Warren Buffett posed a question in a letter to his company's shareholders. Roeder, who has profited from betting against America over the past 238 years. This rhetorical question to investors became a well-known saying after it circulated on the internet and returned to the United States. No one can succeed by betting against their own country. At the same time Buffett was writing his letter, the Chinese market across the ocean was ablaze. By the end of the previous year, the Shanghai Composite Index, which had been hovering around 2,300 points, surged to 4,400 points in just one spring. At that time, a photo of analysts from Guodai Junan in May, raising their hands with 5 fingers high, went viral online. They chanted the slogan, 5,000 points is not a dream. Amid the market frenzy, no one remained calm. Entrepreneurs invested their life savings into the stock market, and a 90-year-old put in the accumulation of a lifetime. People were eager to seize what they believed to be a once-in-a-lifetime era of benefits. No one expected the benefits to end so quickly. On June 26, 1,000 stocks in the A-share market hit their daily limit. Down. In the following 10 days, the market trampled and fled. Data showed that the market value of the Shanghai and Shenzhen stock markets evaporated by 164.3 trillion, with an average of 11.7 trillion evaporating each day. During the just-concluded National Day holiday, I updated a case of a share-listed companies that had been orchestrating a financial fraud for 10 years through financial manipulation. The original intention was to remind friends who were rushing into the market to be aware of the risks. Unexpectedly, after the video was released, it was met with many inquiries in the comments section and backstage. Some said it was like refusing to eat for fear of choking, while others said the intention was punishable. After the National Day, the Shanghai Securities Regulatory Bureau released 2 announcements on the disposal of illegal share reduction. According to the content of the announcements, their operation method was to accept a large amount of shares through block trades on the 8th and sell them all on the 9th, not even willing to hold them for an extra day. I firmly believe in Chinese assets and am convinced that the current secondary market pricing is far from normal levels. However, I am also well aware that the frenzy and barbarism of the secondary market are beyond ordinary people's imagination. Stock market investment is never about picking up money from the ground series. It is a zero-sum game of cyclical capital and probability. During the 2024 National Day holiday, securities firms opened about 3 million new accounts, with the majority being from the post-90s and post-2000s generations. Before the new generation of young people chase another round of era benefits, it is worth looking at how the composers wielded their sickles in the last cycle. The most infamous and barbaric case of market manipulation in the A-share market is the 2019 Kangmei pharmaceutical incident. Before the crisis broke out, the company's market value has now shrunk to only 28.5 billion, with a 77% evaporation. Although Kangmei has now miraculously delisted and relisted, investors who entered at the peak will basically never wait for the day to break even. As the company with the largest financial fraud scale in A-shares to date, how did Kangmei set up this huge fraud? And why was it ultimately able to delist and relist? What kind of punishment did the orchestrators receive? Kangmei's story begins with its founder, Maxing Tian. Maxing Tian is from Perning, Guangdong, and was not well off since childhood. By chance, Maxing Tian met the local pharmaceutical magnate and obtained the startup funds for his life, a traditional Chinese medicine shop. In 1996, Maxing Tian ushered in his first opportunity for revenge. At that time, the price of Santi medicinal materials began to rise. Maxing Tian invested and hoarded a large amount of Santi before the price rose, made a fortune, and established Kangmei Pharmaceutical the following year. different from the previous focus on traditional Chinese medicine. After establishing Kangmei, Max Sangtian turned to Western medicine and successfully developed national new drugs such as Luxin and Pinglac in just 1 year, becoming the darling of the capital market. In 2001, Max Sangtian pushed Kangmei Pharmaceutical onto the Yuan shares, and on the day of listing, the company's market value was 2.566 billion RMB. Over the next few years, Max Sangtian actively expanded new businesses, successively launching concepts such as traditional Chinese medicine slices, small packaging and medicinal materials e-commerce, and was recognized as a national high-tech enterprise. However, a series of attempts did not bring much return in the capital market. From 2001 to 2006, Kangmei's market value basically hovered around 2.5 billion. It was not until after 2008 that Kangmei's market value began to soar rapidly, breaking through 10 billion in 2009 and 100 billion in 2015, becoming the first pharmaceutical company in the A-shares to break through a market value of 100 billion. The rapid increase in market value in a short period of time is partly due to Kangmei's leading position in the main business of Chinese and Western medicine. And on the other hand, it comes from its new business expansion: medicinal materials, real estate. In 2011, Kangmei Pharmaceutical obtained the operation and management rights of Punning Chinese medicinal materials, market and invested in the construction of Punning Kangmei Chinese Medicine City. According to reports, its 40-year property rights shops have 945 rooms, and the price is 12,000 per square meter. Although the investment in the Chinese Medicine City did not bring huge profits to Kangmei in business revenue, it was sought after in the capital market. In the face of the rising market value, Max Sangtian successively builds Chinese Medicine City projects in Kunming, Yuning, Longxi, Gansu, and Bozihu, and he'll be transforming from a medicine king to a landlord. In addition to the above two reasons, the third reason for Kangmei's market value surge is its leader, Max Sangtian. In June 2015, a shares encountered a historical stock disaster in the scramble of the market. The market value of Shanghai and Shenzhen stock markets evaporated more than 1.1 trillion RMB. At Kangmei miraculously survived this round of stock disasters, and in the following 3 years, the market value soared to the peak of 130 billion. The one who made this stock market miracle is Max Sangtian. Since its listing in 2001, Kangmei has raised 45.2 billion, and from listing to 2018, Kangmei has implemented 19 dividends with a total payment of 5.26 billion. From the perspective of equity ratio, the vast majority of these funds fell into the hands of Max Sangtian and his family. In addition, Max Sangtian also made a lot of money through the form of equity pledge. Public data shows that after 2012, the pledge ratio of Kangmei Pharmaceutical in his hands has been maintained at a level above 80% for a long time. From these 2 points, it can be seen that the secondary market is not an expansion period for Max Sangtian's enterprise, but a gold pawn. At this time, Max Sangtian did not expect that it was this greed that ultimately led his career to an irreparable end. During the 2015 stock disaster, Kangmei's market value once fell from 100 billion to the low point of 58 billion, almost half. For Max Sangtian, whose pledge ratio exceeded 80%, if the stock price continued to fall and broke through the flat position line, it is very likely that he would face either paying a large amount of margin at one time or losing the control right of Kangmei. To avoid this situation, after 2016, Max Sangtian embezzled 11.6 billion of Kangmei's funds to speculate in the company's stocks, pushing the market value to a high of 130 billion. At the same time, in order to maintain the high stock price, Max Sangtian also created the illusion of Kangmei's performance rising year by year, by forging financial statements. According to the later investigation report of the China Securities Regulatory Commission, from 2016 to 2018, Kangmei's total fictitious monetary funds increased by 88.6 billion, and the total fictitious business income increased by 29.128 billion RMB, which is the largest financial fraud incident in the history of A-shares. At the end of 2018, Kangmei Pharmaceutical was questioned by the China Securities Regulatory Commission for information disclosure violations and was asked to self-check the company's account. On April 30 of the following year, Kangmei Pharmaceutical issued an announcement that could be described as a provocation to the intelligence of the entire secondary market practitioners in China. In this announcement, Kangmei Pharmaceutical stated that due to the company's financial processing errors, it miscalculated nearly 30 billion RMB in monetary funds. It is understandable to have more than 3 pieces of account, but it is a bit exaggerated to have more than 30 billion. After the announcement was released, the China Securities Regulatory Commission asked 31 questions in a row, asking Kangmei to explain the specific situation. Subsequently, its financial fraud problem was exposed and Kangmei's market value quickly collapsed. In May 2020, the China Securities Regulatory Commission imposed a fine of 900,000 RMB on Max Zhangtian for financial fraud and a lifetime ban from the securities market. The top-level punishment. As soon as the announcement came out, there was an uproar from all walks of life. This also ultimately promoted the China Securities Regulatory Commission to introduce a more severe new securities law, raising the top-level punishment amount to 20 million. In November 2021, Max Zhangtian was sentenced to 12 years in prison and a fine of 1.2 million RMB for the crime of manipulating the securities market. The story's other protagonist, Kangmei Pharmaceutical, was taken over by Guangzhou Pharmaceutical Group for 6.5 billion DRG after applying for bankruptcy. On July 4th, 2024, after paying off all debts, Kangmei Pharmaceutical delisted and resumed trading and came back again. On that day, an investor posted a message saying that the craziest thing in this market has never been the endless financial fraud.